As trillions pulse through the financial arteries of the world, an existential question arises for the old guard. Clash with the disruptive forces of Bitcoin, or consider an alliance that could reshape finance forever.
It's one thing for BlackRock to come up with an ETF because they believe in the proposition of Bitcoin. It's another because they see a profitability. Isn't that more of what this is?
I do believe the role of crypto, it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset. It's not based on any one currency. It can represent an asset that people can play as an alternative. I would call the foundation of BlackRock is about hope. You invest for retirement because you believe tomorrow is better than today. And I believe crypto will play that type of role as a flight to quality.
Welcome to the captivating true story of traditional market wizardry, control, and the revolutionary world of Bitcoin. At the epicenter of this narrative is a man whose name echoes through the marble hallways of Wall Street. Larry Fink, the CEO of BlackRock, a financial behemoth that manages over $10 trillion in assets. According to a report from the Boston Consulting Group, that's approximately 8% of the world's total managed assets. Larry Fink is a financial virtuoso, recognized for his extraordinary ability to grasp the intricacies of a market inside and out. With his formative years at First Boston in the late 70s, Fink became a pioneer in debt securitization. Sound complex? It is. And it's this very market that was at the heart of the subprime mortgage collapse of 2008.
Let's talk about the speed with which we are watching this market deteriorate.
The worst day on Wall Street since the crash of 1987.
We're in the midst of a serious financial crisis, and the federal government is responding with decisive action.
But who do you think the government called to clean up the mess? You guessed it, Larry Fink. To add another feather to his cap, when the whole world needed bailing out, Fink, as the CEO of BlackRock, oversaw the bond buyout program for the Federal Reserve as part of the emergency economic stabilization measures during the COVID-19 pandemic. These markets and his participation in them have fundamentally changed the game of finance. As of 2023, the global debt of the securitization market has grown to over $12 trillion. Talk about a lasting impact. Now we're barely a minute and a half in, and trillion has already become the buzzword. So just to put that number in perspective, if you spent $1 every second, it would take you over 31,688 years to spend $1 trillion. Now multiply that by 10 for an idea of the impact Fink could have on this market. If they were for sale, BlackRock could buy every Bitcoin in existence at today's price in 2023 for just 6% of their total assets under management. If hodlers would be willing to sell, that is. Just the age of unspent transaction outputs suggests they would not very easily.
Bitcoin is the first global, private, digital, rules-based monetary system in the history of the world. 70% of the roughly 13.5 million units of the 19 are in long-term holding hands.
15 million coins are in strong hands, diamond hands.
Yeah, I'm never getting rid of them. I'm holding on forever. I'll probably die with them just to prove a point.
You do not sell your Bitcoin.
The community gets it.
Over the years, Fink has showcased an acute penchant for control and an unmistakable realization of his own significance in the grand scheme of things. In the Vanity Fair piece, the journalist presents Fink not just as a mere financial savant, but as a calculated visionary, often oscillating between pragmatism and idealism. According to a report from CNBC, Fink's annual letters to CEOs have become as important as Warren Buffett's, with 64% of corporate executives considering them to be influential. This UCLA political science graduate, who rose from being the son of a shoe store owner to serving as a pivotal link between government and Wall Street, has earned a reputation as the Wizard of Oz behind the curtain. Larry Fink's character is complex. According to one financier, BlackRock isn't just a job for him, it's his life and identity. This attitude may resonate with Bitcoin advocates, 62% of whom, according to a survey by CoinDesk, view their support for cryptocurrency as an ideological commitment, not merely a financial investment.
The whole principle behind Bitcoin is that nobody should have the power to create money out of thin air without earning it, without working for it. Bitcoin is not an investment. It's a protest against a horrible and corrupt system. This is the only revolution that matters. If we don't take the power away from these people to create money out of thin air, we are literally funding our own extinction, and it's our fault.
Adding layers to his character, Fink has a moral issue with Wall Street's gigantic bonuses, echoing the sentiments of 56% of Americans who believe Wall Street does more to hurt the economy than help. Intriguingly, one former Goldman partner notes that Fink hates Goldman, further highlighting his distrust of certain Wall Street norms. This sentiment is deeply embedded within Bitcoin's ethos, which also challenges established financial institutions. Fink's ambition is another facet that can't be ignored. According to those who know him, he is propelled by an edge, aiming to be a good oligarch. This drive resonates with many in the Bitcoin community, who are also motivated by a nuanced perspective on how to wield influence ethically. But the similarities end almost as soon as they begin. Larry Fink's BlackRock is a beacon of centralized financial power, while Bitcoin aims to disrupt that very concept. BlackRock, the empire that Fink built, is the epitome of centralized financial power, managing trillions in assets. This is fundamentally at odds with Bitcoin, which champions decentralization and is worth over $600 billion in market cap. Fink endorses the power structures that Bitcoin inherently opposes. While skeptical of Wall Street, he is still very much a part of that institutional fabric. In fact, in the past, he has endorsed polarizing figures like Paulson and Geithner, underlining his alignment with traditional financial institutions that are often viewed skeptically within the Bitcoin community. Fink's regulatory outlook also starkly contrasts with the libertarian tendencies that permeate the Bitcoin community. According to a report from the Cato Institute, approximately 44% of Bitcoin users identify as libertarians, who generally oppose financial regulation. BlackRock's role has shifted global cultural paradigms, especially with Fink's landmark ESG memo, which reshaped corporate responsibility and sustainable investing.
Well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock we are forcing behaviors. If you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, if you don't achieve these levels of impact, your compensation could be impacted. You have to force behaviors. Force change.
I am a woman. I just became a woman. It's just like, are you f***ing kidding me? People don't even respect me, period. And I'm already black, so it's just like, yeah, that already goes against me anyways.
Choice! My choice! My choice! My choice!
This is the neighborhood, and you are not welcome.
That's why I need to be here.
We have had many funds have to pull back from ESG funds. I know you felt under pressures.
And I said I'm not using the term ESG anymore. And the main reason why, you may have a different opinion what ESG does. Everybody has a different opinion.
This memo brought a level of unprecedented control over 88% of companies in the S&P 500, creating maybe a few undesired outcomes. But as fate would have it, Fink has recently set his sights on Bitcoin, a currency whose foundational ethos is the antithesis of everything BlackRock stands for: centralized control. Ironically, this comes after he disparaged Bitcoin in the past, calling it an index for money laundering. Fast forward to today, BlackRock has applied for a Bitcoin ETF, signifying a drastic change in stance.
We as traders are cheering, yes, ETF, ETF, ETF. Yes, great, more money in the system, number go up, everybody's rich, but are we inviting in something that's going to fundamentally change what Bitcoin is? Because now they're going to have a say through large ownership in mining pools, or they're going to run a bunch of nodes, or they're going to have control over the price, right? It's an open question.
Can Fink and BlackRock really tame this digital beast? Bitcoin operates on a decentralized network, upheld by miners and nodes scattered across the globe. According to data from BitNodes, as of 2022, there are around 1 million Bitcoin miners today and over 16,000 reachable nodes worldwide. These nodes are responsible for verifying transactions and maintaining the blockchain. Importantly, this decentralized structure fundamentally distinguishes it from centralized financial entities and instruments, like stocks or bonds. Now, for anyone that's confused about miners and nodes, let's clarify the roles. Miners and nodes are not the same in the Bitcoin ecosystem. Miners are often specialized entities using high-powered computer systems to solve complex mathematical problems, thereby adding new blocks to the blockchain. For this work, they are rewarded with freshly minted Bitcoin. Nodes, on the other hand, act as the distributed check and balance system for the network. Typically run by volunteers or Bitcoin enthusiasts, nodes maintain a full copy of the blockchain and are responsible for verifying the work of miners. They preserve the integrity of the blockchain by rejecting transactions or blocks that violate Bitcoin's consensus rules. Unlike miners, nodes are not directly rewarded with Bitcoin. They are motivated by the desire to uphold the network's integrity and decentralization. So here's the kicker. Even if someone were to control the majority of mining power, every single transaction still has to pass the scrutiny of thousands of nodes. It's a built-in democratic mechanism making unilateral control of Bitcoin highly improbable. That's because each and every one of those approximately 16,000 nodes worldwide would need to independently verify every single transaction, acting as the ultimate bulwark against centralized control. A 2014 paper from Cornell University researchers, titled "Majority is Not Enough," further expounds on this, arguing that even a majority stake in mining power does not ensure the ability to manipulate the Bitcoin network thanks to the decentralized, democratic nature of node verification. Simply put, even if BlackRock, Vanguard, State Street, and governments could amass significant mining power, the tens of thousands of nodes dispersed throughout every single country in the world serve as a built-in firewall against any potential subversion of the network's core principles. In that context, Larry Fink's venture into the realm of Bitcoin stands as a peculiar juxtaposition to his legacy in centralized financial systems. The empirical evidence and the architectural intricacies of Bitcoin suggest that it is an impossible challenge, even for the Wizard of Oz behind the curtain. As Larry Fink and BlackRock venture into the intricate and often elusive domain of Bitcoin, if his recent rhetoric around Bitcoin's global impact and equitable potential is not genuine, he faces perhaps his most formidable challenge to date. If his aim is to exert the same kind of centralized control that has been his modus operandi in traditional financial spheres, he confronts a system inherently designed to resist such control. In a decentralized world of blockchain technology, even a behemoth with $10 trillion in assets under management may find it incredibly difficult to overshadow the innate freedom and autonomy that Bitcoin provides to its network of users. While Larry Fink has shown that he's not one to back away from monumental challenges, the question looms large. Is he venturing into the Bitcoin space to conquer this force of transparency and decentralization? It's a curious consideration, especially when you hear his recent interviews on crypto. He's been quoted as saying that cryptocurrencies serve as safe haven assets and will revolutionize the financial system. On the surface, it's as if Fink has been bitten by the Bitcoin bug, speaking the language of a true Bitcoiner. Yet this is where the skepticism creeps in. His language also includes terms like shaping behaviors, triggering red flags for anyone familiar with his history of centralized control. Can we trust Fink's apparent change of heart? It's difficult to give a clear answer. What's unequivocal, though, is that attempts to control Bitcoin have historically ended in futility. Various countries and individuals have tried and failed to hack, restrict, or ban it. If Fink's new stance isn't genuine, he may soon find himself in an unfamiliar situation, a venture where even a man often dubbed the Wizard of Oz will find his efforts thwarted. So, what do you think? What are Larry Fink and BlackRock's true motives for throwing their weight behind Bitcoin through their ETF applications? Personally, I'm not getting those
"Zoo will own nothing and be happy"
kind of vibes, but that's just me. Are they genuine advocates? Is this yet another ploy to consolidate power, or is it simply about profit and providing diversification to his clients? On that note, please give this video a thumbs up. Your opinion matters to us, so please leave your thoughts, questions, or even disagreements in the comments section below. Let's continue this conversation and explore the complex world of Bitcoin and financial systems together. Thanks for watching.